Hey, what's up guys? This is Leo with DRIPCalc, and today I'll talk about my little Tesla predicament that I got myself into, and I'll tell you how I got into this situation and how I resolved it today. So we'll call it a Tesla rescue mission. Okay, so before we begin, none of this is investment advice, so just for information purposes only. And if you like this kind of videos, guys, smash the like button. Let me know in the comment section below if you want me to make more of these videos about options and whatnot. And with that said, let's begin. Okay, so basically in the beginning of the year, I bought some Tesla stock, and the purpose of it was to basically wheel it. Sell calls if I get assigned, sell puts if I get assigned, sell calls, and so on and so forth. And I'll show you my journey in a little bit. But basically, I got in the situation where my calls got extremely underwater, and you can see here. So this was the situation was created basically on December 12th. So I have a Tesla 350 call into January 27. Not a good situation if or when Tesla is trading at $470. So we're basically $120 below the current price, and that's not a very good thing. And by the way, guys, if you follow TJ the Wheel Deal, he was actually in a very similar situation, although his account size is much bigger. So he had basically the same situation on his Tesla stock. He is $10 below my strikes, so he's at 340, and we kind of like mimic each other. Well, I don't know if he mimics me, but basically our journey is sort of similar in the last couple of months as far as, you know, covered calls and rolling them. Okay, so anyway, let's start from the very beginning. Basically, somewhere in January, I bought 100 shares of Tesla for about $194, give or take. I don't remember, maybe less, maybe more, and I started selling covered calls, and you can see here's my history. I made $200, I made $195, I made $200. No, actually, those are strikes. I'm sorry. So here I made about $1,500, and then in May, I sold, like, Tesla was trading at around $175, I think. Let's look 1 year. May, yeah, 160, 170, 160. Now we think it's a great price, but back then, I was underwater even with my with the call premiums that I collected. And I was like, on May 14th, I'm like, okay, I'm gonna sell a $200 call. Maybe it was $210, I don't remember, but doesn't matter. I collected $700 on it, and that was for June 19th. Okay, and I believe it was somewhere around earnings. But anyway, so what happened? Let's go back to Tesla chart. Maybe it was July 20th expiration. I don't remember. Basically, like, I sold that call, and Tesla skyrocketed from like $170 range to $270. It was above $270 at some point, and I was like, oh crap. I don't want to lose my shares. I don't want to give up all this growth. Okay, and so I started rolling. I rolled it to $230. I collected $250. Then I rolled to $290. I collected $990. And finally, 4 days ago or 5 days ago, I rolled to $350 and I collected $460. At the time, Tesla was to $425, give or take. And yeah, basically, I was in a predicament where I'm $120 below current trading price, and I have to sit on this option for more than 2 years. And I'm a firm believer in Tesla. And yes, this particular 100 shares, they were for wheeling purposes only, but at some point it graduated to hold, to, you know, perma hold, and maybe sell some call options on it. But, you know, nobody expected this crazy run. Nobody expected, you know, Tesla to go from 213 in October to 282. Today it was 282 at some point, guys. Check this out. 482. I'm sorry, 482. So it's more than doubled in 2 months. It's completely insane. You know, it's a Trump trade and Elon Musk being friends with Trump, but a lot of it is actually not even the FSD. But I think now all the street analysts are pricing in Tesla bot, Optimus, and that thing will take Tesla to the moon. At least that's my belief. And so the rescue mission. So what do? I don't want to sit on my Tesla for 2 years, and you know, by then it's probably going to be like $1,000 maybe, give or take. So what did I do? So first of all, number one, what I was doing, let me go back to this picture. I'll zoom out a little bit. So you can see here, I had also 16 shares. So 100 shares were covered by a call, and 16 shares were not covered. Okay, and I was in a good profit on those as well. So 227, 228 average cost, so more than 100% return on those. Okay, now where did I get those? So every time, or almost every time I sold a call, I immediately bought shares. So these 16 shares over here, they're free, essentially free. I bought them with the call premiums, and you can see here the total premiums I've collected from all the rolling, about $4,000. Okay, now maybe there was a time when I didn't buy a share, but most of the time I bought shares. And so that's one of the key takeaways from this whole story, is that when I sell a call most of the time, and now I'll basically force myself to do it every time, is if I sell a call, first of all, go further out of the money, collect less premium, but much lower delta. That's number one takeaway. But second, I will always buy the underlying shares with the call premium, just in case I get called away. I still have something to show for it, not only the profit on the call or the call strike, but also the actual shares of the company, if I believe in the company. And I am a firm believer in the company, in Tesla. I've been for a long time, but and I'll show you my belief. Anyway, so what did I do? I decided to roll this option right here, take a loss right now before it goes way beyond control. It's already $120 in the money, but it could run really away. Like, let's say Tesla goes to 550 within a week, this thing will be completely underwater, and that will be very expensive to get out of this situation. And waiting 2 years to collect 350 at the end is not something I was willing to do. So I decided to roll to the highest available strike, basically same month, same expiration date, but I went for $890. Okay, and that cost me $13,000 right over here. And well, this was my first attempt to roll. It didn't succeed actually, so I had to up my limit price to 136, and it actually successfully closed at 150, 13,580 basically, or 135.80. That's what it cost me to roll this. Okay, but what I did, again, let's go back to the spreadsheet. So I because these 16 shares, they were essentially free from the previous call premiums. So what I did is I sold the 16 shares. I collected $7,500. Okay, and I sold them for exactly $469. Now 20 minutes later Tesla went to 482, but it is what it is. I already sold. Okay, so I rolled. These are the strike prices. So to close the old call, I paid $222.23. To open a new one, the 890, I collected $86. Total cost was $13,580 minus these free shares. Basically, my total cost out of pocket was $6,076. Yes, it's very painful. Ouch. It hurts a lot. But guys, I've added, so 890 minus 350, and basically $54,000. So I spent $6,000 to collect $54,000 in 2 years. I will probably keep rolling this. Okay, at some point when higher strikes become available, when Tesla slows down, chills out, I think this stock is going way above $1,000. I don't know when, but I want to capture most of that upside. I'll give up time. This will be a perpetual roll until Tesla kind of like chills out, and I sort of can get my shares back, or whatever. I think it's more than 2 years probably, but by then new strikes will open up. Maybe there will be a big crash. Tesla gets down to 200 again. I will be able to get out of this call option, whatever. I don't know what will happen, but for $6,000 I bought myself a $54,000 upside. I just have to wait 2 years, and I'll basically keep those shares, and now I have the option to roll it upwards because it's so out of the money that I have plenty of room to play with. Okay, so again, the takeaways, when I sell call options, I try to and now I will try to always do it, but most of the time I do it, I buy the underlying stock. And these 16 shares that we have over here, they were completely free to me because I was using the call premium to buy them. Okay, And just to show you my conviction on the stock, in April on April 2nd, you can see I bought a $155 call. So the reason for buying that call, I was limited on cash, and I wanted more exposure to Tesla. So I bought for $67 or $6,700. I bought a 155 call expiring in December of 2026. So basically at the time it was like 2.5 years away. And right now this option is worth about $230 more. Okay, so multiply that by 100, that's $23,000 profit, or unrealized gain. I'm not selling it. I'm waiting until 2026, and then I'll figure out what to do with it. But basically, yeah, that's my level of conviction. The share price of Tesla back then, it dropped significantly. It's like crazy. Let's look at year to date. Yeah, over here, I actually went early. It was still 166. Then it dropped to 138 or 140, I believe. Let's see, 52-week low on Tesla was 139, basically, right here. So those people who bought it over here, they are sitting pretty. I'm also not complaining with my, covered call or leap, Tesla leap. And so that's another takeaway. When a stock I really like goes down, like has a significant drop, either buy shares, but I am more leaning into leaps now. I'm changing my strategy. I like the leaps much better because they're much more capital efficient. So for me to buy 100 shares of this stock, it would cost me at the time, so I think it was like $17,000. Let's look again, April 2nd, yeah, $16,600. That's how much it would cost me. And I spent $6,700, so $10,000 less to control the same 100 shares and just sit and wait. And the growth, like if you bought back there, you would be up 200% right now. I am up about 400% on that buy right now. So leaps are much more capital efficient than buying shares if you get the direction of the stock correctly. Now, my firm conviction was that Tesla will be $700 by the end of 2026. Well, at this point, I'm afraid it's going to be over 1,000, but it's a problem we'll have to deal with later. I think it's much easier to roll an 890 call than it is to roll a. So you can see here, this is my current position. I only have 100 shares. I don't have the 16 shares anymore, but now I have an 890 call, and it is something that's much easier to work with, something that's easier to roll because I'm basically $420 out of the money. Okay, yeah, in 2 years Tesla will probably gain that, but there will be ups and downs. I will be able to acquire more Tesla shares, maybe play with this option, maybe roll it up at a cheaper price, whatever it is. I don't know what will happen, but 2 years is a damn long time. We might have a recession during this time. Tesla might be below 200 again. Nobody knows, but I have secured an upside of $54,000. It cost me $6,000. Not pretty, but again, because I was buying the shares with call premiums, it's a big plus. Okay, guys. So before I finish, why am I bullish on Tesla? So if we look at Tesla stock on our website DRIPCalc.com, so price action is whatever. We have a short squeeze, we have a gamma squeeze, and that's short-term thing. But while many analysts still price this company as a purely car company, purely automotive, the FSD alone, guys, think about it. 80% gross profit. So it's software. The more you sell, the more money you make. And the more you sell, actually, the gross profit goes up. So let's say they sell, a million subscriptions at 80% gross margin. If they sell 10 million subscriptions, their gross margin will probably be like 90%, because it doesn't cost them any more or the incremental cost to sell another 9 million subscriptions to FSD, to full self-driving, is minimal, whereas they collect the full amount. And once everybody starts switching, once there is a framework for FSD, once Fords and Chevys and Toyotas start buying FSD from Tesla or licensing it from Tesla, the profit margins on that thing alone will be crazy high. Okay, the second thing is the battery. Nobody talks about batteries, but their battery business has a very high net margin. I think it's like in the 40 to 50% net margin on the batteries. And the commercial storage, like, yeah, right now there is like nuclear play, all those nuclear companies that are pre-revenue, they are not making a single penny, they're losing money every quarter, and they're up like 400 or 500% in 2-3 months, just because Sam Altman and ChatGPT invested into a nuclear power company. Okay, and there's a couple other companies that also basically skyrocketed on the idea that they're going to build nuclear. Okay, but that's 5 to 10 years away. Nobody's going to make a single kilowatt hour out of those nuclear facilities for the next 5 to 10 years. However, there's plenty of solar. Solar will come back, and solar only works during the day. However, most of it is used overnight, and so to keep that solar energy that they generate during the day, Tesla's batteries, on industrial scale, they will be installed throughout the southern U.S. and it's already installed in Australia and many other countries. So that business is growing tremendously. The profit margins are incredible, and while it's small potatoes right now, I think that will add significant amount of money to the bottom line for Tesla. And then nobody's talking about the robot. I'm not even talking about robotaxi and Optimus Bot. Those things will bring in billions, if not trillions, to the market cap in a pretty short time. And so if we look at revenue estimates for Tesla, these analysts, they're estimating end of 2027 to be $40 billion now, and then EPS at that time to be $1.55. No, this is 2027. Okay, $1.50. 2 years from now, EPS $1.50. I think these guys are sandbagging. I think it's going to be much higher. Once the FSD starts rolling out, like, on the actual commercial scale, once there's regulations in place and they can actually sell it on the open market, once they account for it, because they already sold a lot of it, but they can't put it on the books because it's still like, in beta testing. So the profit margins on FSD are insane. Robotaxi, I think $1.50 in 2 years from now is really sandbagging it. I think it's going to be much higher, but just the growth of this company is insane. And I'm not even considering Tesla Bot because it's just like the market potential for the robot is, it's literally mamish, like trillions of dollars. So yeah, I am very bullish on Tesla long term. Yes, they had a stagnant growth for the last couple of years, but we're kind of in a recession, like 11% inflation at one point. Like, yeah, for the year it was 9%, but in July of 2022 it was like 11% year over year for that month. So that's crazy. Everything was going up, housing going up, prices for everything up, and yeah, people kind of like slow down the purchases of Teslas. But this quarter, especially with Trump going away with tax credits, so right now everybody's buying Tesla to get the tax credits, and they had 0% financing, which ended a couple days ago. But yeah, I think this quarter will be tremendous, but it's not going to be just cars. Cars is just like to get them to the next level, to carry them forward. And look at this cash position, $34 billion. Debt, they have about 10, so net cash about 24 billion, and it's growing every quarter. Stock-based compensation is in check. Net free cash flow 2.47 billion. For the year, so this was minus 2. Okay, so like 3.5 billion free cash flow, but over here I'm not sure why it shows negative. Don't remember what it was, but still, the free cash flow 86 cents per share or 2.7. All these numbers, they will skyrocket, guys. It will go parabolic, not just on the stock price, but also on the revenue. Again, these are my opinions, not financial advice, but that's what I think about Tesla, and that's why I bought this Leap right here, and it's already printing like crazy, and I still have 2 years to go. And that's why I basically lost $6,000 to roll this bad boy out and about. It's worth it for me. Okay, guys, thanks for watching. Please like the video, subscribe to the channel. If you want to try out our stock research tool, visual stock research tool, we are running a 40% promotion right now. This is going to end very soon. So check it out, 2 weeks free trial. If you don't like it, cancel. If you like it, you can keep it, and 40% lifetime discount. So that's like less than one frappuccino per month. Yeah, check it out, try it out. 2 weeks for free, and you get all the benefits, including the stock comparison tool, which is basically the stock research, but you have two stocks side by side where you see all the important metrics right next to each other for each company, and can zoom in, zoom out, all the important metrics right in front of you. Okay guys, thanks for watching. I'll see you in the next